This isn't just another personal finance guide. This is your complete, unfiltered audiobook masterclass on engineering absolute financial independence. We're going to dismantle the old myths of money, hardwire a bulletproof abundance mindset, and hand you the exact blueprint required to accelerate your net worth. Forget the anxiety of living paycheck to paycheck. It is time to step into financial sovereignty. Let's begin. But first, a quick note. We've noticed that nearly 80% of our dedicated listeners are not yet subscribed to the channel. If this audiobook brings you value, please support our work by hitting the subscribe button and liking this video. It fuels our mission to bring you high-level financial education completely free. Thank you. Now, let's unlock your wealth. Have you ever wondered why some people seem to attract money effortlessly, while others hustle their entire lives only to stay exactly where they started? What if I told you the difference isn't luck, it is inheritance, and it certainly isn't raw intelligence? The difference is the understanding of exponential velocity. You probably heard the rule of 72, the classic math trick, where you divide 72 by your expected interest rate to see how many years it takes to double your money. If you get an 8% return, 72 divided by 8 means your money doubles every 9 years. It's a beautiful, simple metric. But math alone won't make you wealthy. Mathematics requires a pilot. It requires psychology, discipline, and execution. That is what this audiobook is about. These 20 master keys are the psychological and tactical operating system you need to make the math work in your favor. Each key is a vital upgrade to your financial software. Are you ready to stop trading time for pennies and start building a self-sustaining financial empire? Then let's step into Chapter 1. Chapter 1, Key 1, the Chronology Advantage. Time is the ultimate multiplier. Welcome, financial architect, to the absolute bedrock of wealth creation. If you take nothing else away from this entire audiobook, let it be key number 1. Time is the undisputed king of the compounding universe. Imagine you are planting an orchard. The soil is your investment account. The seeds are your dollars. If you plant a seed today, it has decades to establish deep roots, absorb nutrients, and grow into a massive, fruit-bearing tree. If you wait 20 years to plant that exact same seed, it will always be 20 years behind. It will never catch up to the tree planted today. This is the chronology advantage. The earlier you deploy your capital, the less heavy lifting you actually have to do. Your money begins to generate its own gravity. The difference between starting your investment journey at age 22 versus age 35 is not just a few $1,000s. It is a chasm of hundreds of thousands, potentially millions, of dollars in lost exponential growth. Waiting for the perfect time to invest is the most expensive mistake you will ever make. The perfect time is a hallucination. It's an excuse cooked up by fear. The only time that exists is right now. The ironclad takeaway: stop waiting for a windfall to start. The sheer volume of time your money spends in the market is vastly more important than the initial amount you invest. Put your first seed in the ground today. Chapter 2, Key 2, the Micro-Habit Multiplier. Consistency beats intensity. You've accepted that time is your greatest ally. But you might be thinking, I don't have thousands of dollars to invest right now. How can I possibly build an empire? Enter key number 2. Consistency obliterates intensity. We are socially conditioned to believe that wealth comes from massive, dramatic events. Selling a tech startup, winning the lottery, or inheriting an estate. But enduring wealth, the kind that survives recessions and generations, is built in the shadows through boring, relentless micro-habits. Think of a river carving through solid rock. The water doesn't smash the rock in a single day. It flows persistently, year after year, until it creates a Grand Canyon. Your financial contributions must mimic that river. Investing $100 every single week without fail is infinitely more powerful than sporadically throwing $2,000 into the market once every few years when you feel like it. Inconsistency is a massive leak in your wealth pipeline. Skipping a month of investing might feel harmless, but you are robbing your future self of the compound growth that specific deposit would have generated over the next 30 years. The vital question: are your financial habits a steady, unstoppable river, or are they unpredictable flash floods? The ironclad takeaway: fall in love with the boredom of consistency. Automate your micro deposits. Small, daily disciplines eventually give birth to monumental financial achievements. Chapter 3. Key 3, the infinite loop. Reinvesting is the spark of velocity. Now we arrive at the catalyst. You have the time, you have the consistency. But key number 3 is what turns a regular savings account into a wealth-generating nuclear reactor. When your investments pay you, whether through stock dividends, bond interest, or capital distributions, you are faced with a critical test of your financial maturity. The amateur sees a dividend as free money, an excuse to buy a nice dinner or a new pair of shoes. The wealth architect sees a dividend as a new soldier ready to be deployed to the front lines. You must create an infinite loop. Every single cent your money earns must immediately be sent back to work to earn more cents. When your money makes money, and that new money makes even more money, you have unlocked true exponential velocity. If you spend your dividends, you are severing the compounding curve. You are telling your wealth, stop growing, you're big enough. But if you automatically reinvest them, often called a DRIP, dividend reinvestment plan, you are pouring gasoline on your financial fire. The ironclad takeaway: never consume the offspring of your capital. Reinvest every penny of your returns to create an accelerating avalanche of wealth. Chapter 4. Key 4, the Stoic investor. Patience as a profit strategy. We live in a dopamine-addicted society. We want next-day delivery, instant streaming, and immediate gratification. But the financial markets do not care about your impatience. Key number 4 demands a radical psychological shift. Patience is not just a moral virtue. It is your most lucrative profit strategy. When you look at the greatest investors in history, their primary skill wasn't picking the absolute best stock every time. Their primary skill was the ability to sit on their hands and do absolutely nothing for years, even decades. The market is designed to test your nervous system. It will plunge, it will soar, it will trade sideways for agonizingly long periods. Your brain will scream at you to intervene, to tinker, to sell, to pivot. This urge to act is the enemy of compounding. True wealth is built by holding high-quality assets through the terrifying storms and the boring doldrums. The vital question: can you watch your portfolio drop 20% in a month and calmly go to sleep, knowing your long-term thesis remains intact? The ironclad takeaway: master your urge to react. The transfer of wealth in the stock market flows directly from the impatient to the patient. Be the Stoic. Chapter 5. Key 5, the logic shield. Banishing fear and greed. Building on patience, we must confront the twin demons that haunt every investor's psyche. Key number 5 is about constructing an impenetrable logic shield around your portfolio to defend it from fear and greed. Fear tells you the sky is falling. When the market turns red, fear convinces you that this time is different, that the global economy is collapsing, and that you must liquidate your assets immediately to survive. This results in selling at the absolute bottom, the cardinal sin of investing. Greed is equally destructive. Greed whispers that your neighbor is getting rich on a dog-themed crypto coin, and you are missing out. Greed forces you to abandon your diversified strategy to chase a speculative bubble right before it pops, resulting in buying at the absolute peak. To harness the doubling matrix, you must divorce your emotions from your execution. You cannot control what the market does, but you have 100% control over how you respond. The ironclad takeaway: emotional investing is financial sabotage. Build a rigid, rules-based strategy and follow it blindly when your emotions flare up. Logic builds empires. Emotion burns them to ground. Chapter 6. Key 6. Illumination over ignorance. Financial literacy is armor. What is the best antidote to the fear we just discussed? It is illumination. Key number 6 dictates that ignorance is the most expensive luxury you can never afford. Why do people panic when the market drops? Because they do not fundamentally understand what they own. If you buy a stock just because a guy on television yelled about it, a 10% drop will terrify you. But if you have done your research, if you understand a company's balance sheet, its market share, and its competitive moat, a 10% drop isn't crisis. It's a discount. You must relentlessly educate yourself. Read the books, listen to full audiobooks, study the asset classes. When you understand the historic resilience of the global economy, Market corrections stop looking like tragedies and start looking like opportunities. The vital question: if a 10-year-old asked you to explain exactly how your money is invested and why, could you do it clearly and simply? If not, you are investing blindly. The ironclad takeaway: knowledge annihilates fear. The deeper your financial education, the thicker your armor against market panic and predatory advice. Chapter 7, Key 7, The Post-Mortem Profit. Harnessing the power of loss. If you stay in the game long enough, you will take a hit. You will pick a bad asset. You will mistime a major move. You will lose money. Key number 7 is about how you process that inevitability. Amateurs view a financial loss as a reflection of their self-worth. They feel shame, they hide from their portfolios, and they vow never to take a risk again. Wealth architects view a loss as the cost of tuition in the university of the market. When you suffer a loss, you must conduct a cold, clinical post-mortem. Why did this fail? Was my research flawed? Did I succumb to FOMO? Did I ignore a glaring red flag because of greed? Every mistake contains a hidden jewel of wisdom. If you extract that wisdom, the loss was an investment in your future accuracy. If you wallow in pity, it was simply a loss. The ironclad takeaway: never let a good failure go to waste. Transform your financial missteps into the very strategies that will secure your future millions. Chapter 8, Key 8, The Financial Archipelago. Defending against ruin. Let's talk about structural security. Key number 8 is your defense against total annihilation. Imagine your wealth as an island. If an economic hurricane hits that specific island, everything is destroyed. But what if your wealth was an archipelago, a vast chain of different islands spread across the ocean? This is diversification. It is the only free lunch in finance. If 100% of your net worth is tied up in your employer's stock, or a single real estate market, or one sector of the economy, you are walking a tightrope without a net. Proper diversification means spreading your capital across different asset classes: equities, bonds, real estate, different geographies, and different industries. When tech stocks crash, your healthcare stocks might hold steady. When domestic markets falter, emerging markets might surge. Diversification smooths out the terrifying volatility of the market, making it psychologically easier to stay the course and let your capital compound. The ironclad takeaway: never bet your financial life on a single point of failure. Construct a resilient financial archipelago to ensure you survive every storm. Chapter 9, Key 9, The Clock Trumps the Crystal Ball. The illusion of timing. One of the greatest myths in personal finance is that the wealthy got there by perfectly timing the market, jumping in at the exact bottom and leaping out at the exact top. Key number 9 destroys this illusion. Time in the market will always defeat timing the market. The market's biggest gains often occur in sudden, unpredictable, violent bursts. Historically, if you miss just the 10 best trading days in a decade, your overall returns are slashed drastically. And guess what? Those best days almost always occur immediately after the worst days, right when the amateurs have panic sold and are sitting in cash. Trying to time the market is an exercise in arrogance. It requires you to be right twice. You have to know exactly when to sell and exactly when to buy back in. Almost no one can do this consistently. The ironclad takeaway: surrender the crystal ball. Embrace the boring certainty of the clock. Stay invested through the chaos to guarantee you are present for the explosive recoveries. Chapter 10, Key 10, The Parasite of Percentages. Slaying investment fees. You are compounding your money, but are you aware of the silent parasite draining your lifeblood? Key number 10 forces you to confront investment fees. Financial institutions have conditioned us to believe that a 1.5% or 2% annual management fee is standard, almost negligible. It's just 2 pennies on the dollar, they say. But over a 30-year investing timeline, that tiny 2% fee will literally devour hundreds of thousands of dollars of your potential wealth. It is compounding working violently against you. If your portfolio returns 8% a year, but you pay a 2% fee, you only capture 6%. You're taking 100% of the risk to surrender 25% of your gains to an advisor or fund manager who often fails to even beat a standard, low-cost index fund. The vital question: do you know the exact expense ratios of every fund in your portfolio? The ironclad takeaway: become fiercely protective of your percentages. Shift toward low-cost index funds and ETFs. Every fraction of a percent you save in fees is a massive boost to your Exponential Wealth Blueprint. Chapter 11. Key 11: Capital Preservation, the antidote to lifestyle creep. Let's step outside the portfolio and look at your daily life. Key number 11 addresses the silent killer of the middle class: lifestyle creep. As your income grows, through raises, promotions, or business success, society expects you to upgrade your life. You buy the luxury car, you get the bigger mortgage, you start flying first class. Your income doubled, but your expenses doubled right along with it. The gap between what you earn and what you spend remains zero. This gap, your savings rate, is your absolute superpower. If you make $200,000 a year, but spend $195,000, you are financially fragile. If you make $80,000 a year, but live on $50,000, you are a financial titan in the making. The ironclad takeaway: when your income expands, aggressively defend your living standard. Direct the surplus into your compounding machine. Wealth is not what you spend. Wealth is what you refuse to spend. Chapter 12. Key 12: The Legal Shield. Maximizing tax efficiency. You are minimizing fees and curbing your spending. Now, you must conquer your biggest lifetime expense: taxes. Key number 12 is about mastering tax efficiency. It does not matter what your gross return is. All that matters is your net return after Uncle Sam takes his cut. If you are day trading in a taxable brokerage account, you are triggering short-term capital gains taxes that can instantly slash your profits by up to 37% or more. You are voluntarily bleeding out. To achieve exponential velocity, you must legally shelter your capital. Utilize IRAs, Roth accounts for 401(k)s, and health savings accounts. Understand the difference between long-term and short-term capital gains. By strategically placing the right assets in the right tax advantage buckets, you supercharge your compounding because your money grows unhindered by annual tax drag. The ironclad takeaway: don't leave a tip for the IRS. Aggressively educate yourself on tax codes and legally shelter your compounding engines to accelerate your timeline to freedom. Chapter 13. Key 13: Systematized Success. The automation mandate. We spoke earlier about consistency, but relying on human willpower to be consistent is a fatal flaw. You will get tired. You will get distracted. Key number 13 is the automation mandate. You must remove yourself from the equation. Your wealth creation cannot depend on you remembering to log into your bank on the 15th of the month and transferring funds. You must set up automatic transfers. The day your paycheck hits your checking account, a predetermined percentage must automatically route to your investment accounts before you even see it. When you automate, you eliminate decision fatigue. You bypass the temptation to spend. You enforce paying yourself first as an inviolable law of physics in your life. The ironclad takeaway: treat your investments like a mandatory utility bill. Automate the execution so that your wealth compounds quietly in the background while you live your life. Chapter 14. Key 14: Holistic Capital. Expanding beyond the bank account. True financial architects understand that money is only one form of wealth. Key number 14 urges you to compound your holistic capital. Your net worth is deeply correlated to your network, your skill set, and your physical energy. If you are piling money into index funds but allowing your marketable skills to stagnate, you're limiting your offensive earning power. If you are isolated, you are missing out on the compounding power of high-value relationships and mentorships. If your health deteriorates, your money becomes utterly useless. You must invest in yourself with the same ferocity you invest in the market. Buy the books, attend the seminars, hire the coaches, hit the gym. As your personal value increases, your ability to generate capital expands exponentially. The ironclad takeaway: you are your own greatest asset. Compound your skills, your health, and your relationships, and your financial portfolio will inevitably reflect that elite standard. Chapter 15. Key 15: The Unbreakable Why. Purpose is your rocket fuel. When the market is crashing, your friends are buying sports cars on credit, and your progress feels invisible, why will you stay the course? Key number 15 requires you to define your unbreakable why. Investing purely to be rich is a weak motivation. It will crumble under pressure. You need a vivid, emotionally charged purpose. Are you investing to buy back your time, so you never have to answer to a toxic boss again? Are you doing it to ensure your children graduate college without the chains of debt? Are you building a fortress so you can dedicate your life to a philanthropic mission? When your why is deeply rooted in your core values, skipping a luxury purchase to buy more index funds doesn't feel like a sacrifice. It feels like a victory. The vital question: what specific freedom is your money going to buy you? The ironclad takeaway: anchor your financial mechanics to a profound personal purpose. When the why is absolute, the how becomes effortless. Chapter 16, Key 16, Embracing the Turbulence. Volatility is a feature, not a bug. As you deploy your capital, you will experience violent market swings. Key number 16 demands that you reframe how you view market turbulence. Amateurs view volatility as a malfunction of the system. Professionals understand that volatility is the toll you pay for outperforming inflation and savings accounts. If stocks went up in a straight, predictable line, everyone would be rich, and the premium for taking risk would vanish. The discomfort you feel when your portfolio drops 15% is the price of admission to the compounding club. Do not fight it. Expect it. When you accept that winter is a necessary season, you stop trying to run out into the blizzard in your swimsuit. You sit by the fire, you stick to the plan, and you wait for spring. The ironclad takeaway: stop viewing market drops as crises. View them as the natural, necessary breathing of the economic machine. Endure the turbulence to capture the premium. Chapter 17, Key 17, The Tortoise Strategy. Rejecting the illusion of speed. In an era of social media flexes and overnight crypto millionaires, it is deeply tempting to abandon slow compounding for a lottery ticket. Key number 17 is your defense against the get-rich-quick mirage. Fast money is notoriously fragile money. Wealth built rapidly through high-leverage speculation usually evaporates just as quickly because it wasn't built on a foundation of discipline and understanding. The Tortoise strategy, saving 20% of your income, buying broad market funds, reinvesting dividends, and waiting 30 years, is foolproof. It has a near 100% success rate. Speculating on micro-cap penny stocks has a 99% failure rate. Do you want to be entertained, or do you want to be wealthy? The ironclad takeaway: refuse to play the game of financial roulette. Embrace the boring, predictable, unstoppable force of methodical wealth building. Chapter 18, Key 18, The Multi-Pillar Fortress. Diversifying your income. We discussed diversify your portfolio, but what about diversifying the money flowing into it? Key number 18 requires you to build a multi-pillar fortress of income. Relying on a single W-2 paycheck is the highest risk financial strategy in the modern world. You are one corporate restructuring away from zero revenue. To achieve absolute security and accelerate your compounding, you must create new tributaries of cash flow. Start a side consulting gig, build a digital product, rent out a spare room, invest in dividend-paying real estate. As you build secondary and tertiary income streams, you not only protect yourself against job loss, but you dramatically increase the surplus capital you can hurl into your investment accounts. The ironclad takeaway: your job is your base, but your side streams are your accelerators. Never allow your entire livelihood to rest in the hands of a single employer. Chapter 19, Key 19, The Eradication of Bad Debt. Plugging the hole. You cannot sail to the island of financial freedom if your boat has a massive hole in the hull. Key number 19 is the ruthless eradication of consumer debt. Credit card debt, high-interest auto loans, and payday loans are negative compounding. They are financial cancer. If you're trying to earn 8% in the stock market while paying 22% interest on a credit card, you are financially bleeding to death. Before you can fully activate the Exponential Wealth Blueprint, you must declare war on bad debt. Attack it with everything you have. Cut your lifestyle to the bone, take on extra shifts, and clear those balances. The ironclad takeaway: you cannot build an empire on a foundation of quicksand. Eradicate high-interest debt with extreme prejudice before attempting to scale your wealth. Chapter 20, Key 20, The Legacy Mandate. Elevate the next generation. We have reached the final and most profound key. Key number 20, the legacy mandate. Once you have mastered your psychology, automated your investments, shielded your capital from fees and taxes, and built your financial fortress, you will achieve independence. But wealth hoarded in a vacuum is ultimately meaningless. True financial mastery culminates in the role of the teacher. You must pass this blueprint down. Teach your children about the doubling matrix. Show your siblings how to set up a Roth IRA. Mentor a young colleague on the dangers of lifestyle inflation. Financial illiteracy is a generational curse. You now possess the power to break that curse for your family and your community. When you teach others how to compound their capital, you compound your impact on the world. The ironclad takeaway: your ultimate financial achievement is not your net worth. It is a financial freedom you inspire in others. Share the blueprint. This brings us to the end of the Exponential Wealth Blueprint. You now possess the 20 master keys required to navigate the financial markets, master your own psychology, and engineer absolute freedom. But listening to this audiobook is merely the first step. Knowledge without execution is just entertainment. The market does not reward your intentions. It solely rewards your actions. Revisit these keys. Audit your current financial life. Where are you bleeding capital to fees? Where is your ego overriding your logic? Are your investments automated? Find the gaps, fix them, and let the sheer, magnificent power of exponential compounding take over. Your journey to lasting wealth doesn't start tomorrow. It starts today. Go build your empire.